Welcome to the Circle Beyond Returns by InvestValue. This is not a podcast about markets and not about returns. It's about how people think when they are responsible for capital. In our work at InvestValue, we meet partners, clients, and investors every single day. And what we have realized is information, although is everywhere, clarity rare. And most financial decisions don't fail because of lack of knowledge. They fail because of behavior. This series is an attempt to change that, even if in a small way. We're bringing together people we've worked with, learned from, and been guided by. Individuals who've seen cycles, taken difficult calls, and built with conviction. No predictions, no noise. Just simple and honest conversations on what it really takes to build and manage wealth responsibly. And personally, this matters because behind every decision we take today, there are people and experiences that have shaped us how we think. If this conversation helps you pause before a decision, stay the course when it's uncomfortable, or think a little more clearly, I think the job is done. Because in wealth, how you think matters more than what you pick. In every industry, there are very few people who leave a mark, not just through what they build, but through how they shape the thinking of others. Prasanth Prabhakaran, a startup mentor, an independent director with Cholamandalam Securities, earlier managing director and CEO of Yes Securities, among many other roles. For most of us, VP. He is definitely one of them. With close to 4 decades of experience, he has seen this industry evolve across cycles. And through all of that, what has remained constant is his clarity of thought, his sharp understanding of markets, and a strong emphasis on discipline and governance. In everything he has been a part of, he has consistently brought a long-term, institution-first approach, a mindset that prioritizes discipline over temptation, process over impulse, and long-term thinking over short-term validation. For many of us here, this introduction is also personal. At different points in our journey, we've had the opportunity to work under his leadership. And a lot of how we think today comes from those years. Not just the mechanics of the business, but the mindset to build once something meaningful. And if you've ever heard him speak, you will know. There's always a certain clarity and simplicity in the way he speaks. And outside of work, not many people know this, but he enjoys thinking just as much. So today's conversation is not just about markets or roles. It's about experience, perspective, and the thinking that comes with it. Sir, it's genuinely a pleasure to have you with us. Welcome to the Circle Beyond Returns. Sir, you've been mentor to the founders at InvestValue. Now, what did you see in this team that convinced you their approach to wealth management was necessary for the current markets?
So, Emika, any organization that is built is first built on the passion of the founders that are there in that particular organization. And secondly, once the building blocks are set up for that organization, the processes that are followed and the products that are developed for that particular organization. Now, when we end up looking at InvestValue, you realize that both of these places, the portions that I've spoken about, are in place overall. You have founders whom I worked with extensively, both Tushar and Aditya. When they had started off the organization, were people, one, who was very strong in the knowledge portion of the business, which involves research, extensive exposure to capital markets, upgrading his skill sets on a regular basis and making sure that clientele interests are protected. And on the other side, you have a business builder, an institution builder, who has run sales all his life and has built processes to end up ensuring that client centricity is maintained. Once these two building blocks are in place, you have all the things that are needed for an organization to last for a long time. And that is why I was fairly confident that what journey started off 2 to 3 years back will continue now for the next 10, 15 years. And I'm actually very happy to see the progress, because not just are these two pillars now there, they have added like-minded co-founders who have ended up making sure that the organization becomes stronger over a period. You have a technology head who has been taken in and brought in as the CEO. You have HR which has been brought in. You yourself lead that vertical that is there, and you have other customer service portion of it which has been taken care of. You have built all the co-founding partners which will take care of the strengths of this organization to be built for the long term.
Thank you so much, sir. Touching words. Uh, but my next question would be, with the new PMS license, the stakes are higher. I mean, we can all feel it. Uh, how should a modern firm balance the hunger for growth with the sobriety of fiduciary duty?
So becoming a manufacturer is actually a lot more responsibility on the shoulders of the people, because you're managing the money directly. You're not handing it over to a manufacturer as a distributor that you have done till now. You're taking over the responsibility of making sure that you do not end up doing anything that is against the client at this point of time. So when you have taken the PMS license, the core of this principle remains something which has been eternal in the BFSI space, which is client centricity, taking care of the client's risk profile, and making sure that you manufacture products which suit that particular client. Even the distribution model that you'll build should always be built keeping the client in mind, and not making sure that you have an AUM which keeps growing, because that can be built at any given time. So the next 1 year to 2 years is to make sure that you have a process laid down of investment. Your investment committee clears those processes. Your CIO ends up ensuring that that process is followed to the T and you do not take deviations. But in case there are, like you are in the midst of among the largest crises that are there in the globe. So when these circumstances come in and you believe that there are opportunities that will come for a CIO to take calculated risk, the investment committee should be more than willing to end up ensuring that they are available to end up clearing that risk at any given point of time.
Which means we are putting too much on the CIO's shoulder.
No, CIO is the person who takes the decision. Right. Your infrastructure that you have built around him, the analysts that you have given him at any given point of time, the support that you give as far as technicals is concerned, fundamentals are concerned, because markets are cyclical by nature. A CIO has to take the final call, but the inputs are provided with the research team that has been built around the CIO, who gives the inputs to the team, and the CIO then presents it to the investment committee and they clear it for further investments out. You have to follow the process. There is no shortcut in the business of manufacturing. You have to end up ensuring that calculated calls are also cleared from the investment committee at any given time. Right. That is there.
Right. Okay. Now, most importantly, you've built institutions and shaped leaders like us. If you look at the next generation watching this podcast, many of whom aspire to achieve what you have done or would want an advice. So, what would that advice be from your side?
See, the journey that I have continued for the last 30 years, I wish I can summarize it in a podcast in 5 minutes.
I know, but
it's let me end up putting it this way. You are going to learn a lot of things, and I continue learning it even today. One thing that the capital markets has taught is that there is no constant in this business. Every day you can wake up and there can be a new crisis, new distraction that will come in. But it reminds me of a story that is there, and it's a very simple story. If you are a dog lover and you take your dog out for a walk, you will notice that the dog pulls you in every direction where they find a distraction. You have a squirrel, it will run after a squirrel. It finds a new path, it will want to go on that new path. And you invariably, as a dog lover, because you love the dog, you end up following the path wherever he or she is pulling you across. Now, have you realized that if that distraction happens and the dog lover is pulled in the direction of the dog being taken along, the destination that he or she would have thought for himself, they will never reach. They have digressed into a different path. Similar is the story as far as markets are concerned. If the dog lover is replaced by the investor and the dog represents the market, unless the leash that you hold the dog with is held properly and you do not allow distractions to take care of it, your path is clear. So markets are like that. You're going to have distractions every day. You're going to have alternate paths created, people coming and telling you that this is the path to be taken. But as long as the investor knows their goal, they are willing to do enough reading about achieving those goals enough and keeping track of it and finding the right investment partner along with them. That journey can be reached properly without digressing on the path out.
I quite agree to that, and quite a correlation, sir. Okay. Now, there is one truth that I understand is quite uncomfortable when we talk about markets. Okay. Now, what is that one uncomfortable truth about this industry that most investors should be aware of? I mean, since you have seen those 30 years and many more to go, what is that you feel is still was and is still the uncomfortable truth, and we should be aware of that?
So, 95% of the investors who come into the markets come with an objective of earning returns from the market. They are not here because of love for the markets or understanding what they are doing in the markets. They believe that the stock markets, the capital markets, be it mutual fund business, PMSs, AIFs, yes, or your direct equity, is the easiest way for them to end up earning wealth.
Isn't that true, sir?
It is not.
Okay.
It is not. Which is the difference that is there between a savvy investor and an investor who doesn't understand the markets.
Right.
The earlier example, 95% of the investors are the ones which will get pulled in the direction that the dog will go with. But those 5% who holds their leash ready, they know where they have to reach, they know the dog very well, and they remain on the path, are the ones which will make returns which are large. Now, a savvy investor realizes that I am a shareholder in a company. So my returns are linked to the fortunes of the owner of the company. Whereas an investor comes to invest money and make quick returns from the market. There are no quick returns in this market. There are journeys that you are supposed to ride with the company that you are investing in. And as a shareholder, you have to ride the ups and downs of this market. You should be knowledgeable enough to be abreast on what are the goings on in the company, in the economy, to make sure that you get returns which we hear about where wealth can be created. Otherwise, you will always have the ratios that our regulator talks about regularly, which says that 90-95% of the people lose money. Very few actually make money in the market because their goals are not clear. They do not want to put in the effort that 5% savvy investor puts in understanding the company, understanding the promoter, and investing into the promoter at any given point. And that, according to me, is the learning that the new generation investors will need to do, is that there are no quick lunches. You cannot make money overnight. You have to ride the cycle in this market to create wealth in this market. And let me assure you, if you are willing to put in the hard work, there cannot be a better reward mechanism where you're not running the company, but you're going to ride the results that having rid the company with the promoter.
I agree. So, are you pointing that there is no secret sauce, or is there a secret sauce here?
Secret sauce is hard work like any other business that is going to be there. You have to do, if let's assume that you have a portfolio of 10 stocks or 10 mutual funds into your portfolio. Are you keeping track of it? Are you understanding what is going on in those 10 stocks directly? Because you have decided to become a direct equity investor. You're not handing your money to a professional money manager to manage either through a PMS, AIF, or a mutual fund. Right. If you are a direct investor into the markets, you need to understand that you are a shareholder. You need to understand what is going on every quarter in that company, whether what projections that the management had given, has they met it? If they have not met it, how much have they deviated from, how the valuations are at par. So you have to do your study. Okay. Returns are proportionate for the amount of effort that you put in the market. And this is where most of the investors, as they spend time in the market, realize that I also have to be as educated as my advisor and ask important questions to my advisor in case I want to make returns which are above what the market returns are.
Very interesting. Now, not pointing out at your age, but if you could sit across from your 22-year-old self today, what mistakes would you warn him about, and what mistakes would you still allow him to make? I'm sure you would have made many, or no?
Oh, I've made tons of mistakes, please. I have made only couple of right choices in maybe 20, 30 things that I've done. But I've done those two very well. So if I had been 20, 25 years back, the only thing that I'll tell myself is that I need to listen more than what I speak.
Okay.
25 years back, 20, 30 years back, when I was running businesses at various BFSI institutions, I had a belief that I knew everything that is there in the business. That is why I was confident enough to ride the direction. And the organization that I was working with always allowed you to make mistakes. You are lucky to be in an organization which allows you to do, as an entrepreneur, as an employee, to do 10 things and allow you to fail in 8 or 9 and do only 1 or 2 things which will make you really successful. But 25 years back, I never listened to anybody. Today, I've learned to end up keeping quiet more, allowing the opposite person to talk, and learning from whatever they see. Every investor has something to teach you. They have done investment in a different fashion as you would have done. And you have also lost tons of money in wrong bets. Those 2 or 3 calls which have gone right have done well for me. And that has happened because I have listened and changed my investment style over the last 3 decades, 4 decades that I've been in this market. I think so. Listening is a quality which not many people have. And I've realized that the best guys are the guys who sit and listen to the opposite person talk, because everybody who's sitting on the opposite side loves to talk. Very few people want to listen. So 25 years back, if I had listening capabilities, maybe I would have run businesses a lot differently. I would have led teams a lot differently than I have done over the last 2 decades of my career.
But somehow you would be proud of whatever decisions you would have taken so far, because you never know what happens in future, right? I mean, the decision you take today, how it turns out 5 or 10 years from now. But seeing the people that you mentored, my first question, I'm sure it would bring a lot of pride and happiness to you that somewhere you've groomed the right kind of mindsets and people.
So, an important part of leadership that I believe in is the simple fact that my personal belief is the leader has to be invisible, which means that as long as the goal, the destination has been told to your team below, your only job is to make sure that your team delivers on the goals that the organization has chosen for themselves. Now, the job of a leader is to make sure that any obstacle that comes on the path of that particular team to end up achieving that goal, you are supposed to remove it. Because if you end up doing everything that a team is supposed to do, the team is not going to grow. And you allow the team to grow only when you allow them to make mistakes and you are there to back them up at any given point. So, invisible leadership is something that I've believed for the last 3 decades. I have always believed that the teams are more important. You have to groom the right people, choose them, put in efforts with the teams who are willing to learn, willing to listen, as I've told you earlier,
Yes.
and end up ensuring that they do not have any roadblocks to reach the end goal that the organization has decided upon.
I quite agree, sir. I mean, I remember my days with you, and I remember when we would have been we were and still are in so much awe of the advice that was given out either by you and other seniors, and it has shaped up us in so many ways. And probably now, after gaining that many years of experience, even we feel. I mean, personally, I feel that we should have listened more then. I think that's human.
Yeah, it's experience that teaches you that you will. When I was 25 years old, I felt that among 10 things that I do, all 10 are right. When I am 55 years old, I realize that among 10 things that I do, there will be only one which will be right. The other 9 can go wrong, but that one that I have bet on should end up doing so well that it covers for the remaining 9 failures.
So a bit different tangent here. Since I know you've got 2 boys, Okay, and you know, you've been in the market, and market is harsh. I mean, whatever said and done, it has got its good cycles, bad, but it's harsh. It leaves a mark. Uh, would you want any one of them, like, making a career? Is this a career for the Gen Z? I mean, they would be Gen Alpha, if I'm not wrong. But would this be a good career for the Gen Z? I mean, to look up to, because everybody wants to make money.
So I don't know whether you know my history of my work profile. I started by selling chicken in this when I left my management institute, which is there. To come into finance was a journey which took me around 3 or 4 years after leaving, and only when I joined did I realize that I love it so much.
Oh.
So the belief that you will have 1% of the people who are studying who know the goal that they are supposed to reach. A lot of people will get into the profession by mistake or by doing multiple choices and choosing, saying that I like doing this is what it is. So for me, the advice that I have given both the children are that you choose the path that you want to take. You already have me as a sounding board, though they don't listen to me much, like none of you guys did. But the fact remains that every person has to decide their own path. The profession of capital markets is hugely adrenaline driven. Every day, as I say, when you come in, you have to keep learning about everything that is going on in the globe, everything that is going on with your portfolio. Which other industry gives you this amount of exposure? Which amount of industry allows you to study 2000 stocks and give you the fiduciary responsibility of advising somebody else? Which other industry allows a person who has successfully run businesses to sit in front of you and ask you for advice? So you imagine the responsibility that you have when you are advising a person who has run successful businesses to tell them how to invest, how much knowledge you should have. You should always be better than the person sitting in front of you, right? Because that is why they are sitting and asking you for advice. The brand that you carry is so important. For that, the knowledge that you have to gain on a daily basis is so important that you have to give advice which will end up adding value to their portfolio. If you are not able to work on your own development on a daily basis, not able to work on client centricity, this business is of no use. So I love the business. I love capital markets because it is volatile. It keeps me on my toes. I was in car finance. I was into selling chicken at some point of time. But this kick is totally different.
So it works as if an adrenaline junkie for people.
But you also got to understand that among 100 people who started their career with me, there wouldn't be more than 10 to 15 who are still in the industry. It takes your toll over a period of time. A lot of people are not able to cope up with the pressures of daily monitoring portfolios, advising clients, and all that. So it's a tough business to be in. It's a knowledge-driven business, unlike what the fresh investor community thinks. It requires a lot of homework to be done before you invest into stocks.
One last question, probably on the fly. You've seen the downtime of the cycles, right? The bad cycles, and you've seen the up cycles, okay, the bear, the bull. Any one cycle which has left a scar, or probably remember it as one of the not so greatest time in your tenure of being in the market, or similar that can come.
So there are two phases actually in my life which I'll never forget. One was around 10, 12 years back when the equity markets weren't doing great. It was on a downturn which was there. This was in 2011-12. And we decided to end up looking at alternative products and started pitching to clients alternative products. Unfortunately, the product that we recommended ended up resulting in an exchange going bust, the National Spot Exchange Limited. Lot of investors who had taken positions in the exchange lost money or money got stuck. A lot of retail investors were helped by the regulator by ending up releasing their money out, but you have a lot of HNIs who got stuck in positions. So the first learning that was there in my lifetime of capital markets is don't get into any product which is not regulated by the regulator.
Okay.
It was a major learning curve, and the amount of pressure that we went through as a team, whoever had sold the product, along with us, a lot of other financial institutions had also done it. It was, if you speak to anybody who has been in the market for the last 2 or 3 decades, it would be a large black spot because we trusted that an exchange cannot fail. Unfortunately, it was not a regulated entity the way it should have been regulated out. So it was an episode which was driven by both markets and also our belief that there was an institution which cannot fail. The second one was not more than 7-8 years back when Yes Bank, which I was part of, went through a crisis because of various issues that were there. But it was again something which shaped the way a regulator and a team, along with outside entities who are not associated with your problem. So the moment moratorium got happened in Yes Bank because of various issues, the same day night, I think so it was March 8th or 9th, if I'm not wrong, at around 6 o'clock is when the moratorium got announced. The Yes Securities team coordinated with the exchanges, to first get the settlement payment stopped for Yes Securities clients from the exchange. The regulator was kind enough to allow it. They have a time frame that they can hold it for a period of time. Then they allowed us to coordinate because our settlement bank was Yes Bank. If the money had come in, it would have got frozen. Right. The client wouldn't have got the money. So the exchanges held it back. They worked with us with an alternative bank to open a settlement account. Thankfully, we had paperwork with that bank already. They opened the alternate account, and the settlement money was released into the alternate account all from 6 to 7 in the morning. This was happening in the middle of the night. So you can imagine a company which doesn't have any connection with us was opening an account. There was a regulator who was helping us out. And during the night, the way a banker broker functions, we have only the Yes Bank account linked to the trading account of Yes Securities. We allowed every client to attach an alternative bank account to their trading account so that the settlement money instead of coming into Yes Bank. So the team, the regulator, alternate BFSI players all functioning together, I haven't seen in my 3.5 odd decades of guys working together to end up assuring. And let me assure you, that single episode made sure that not a single rupee got moved from any Yes Securities account because the money was lying in an alternative bank account. The shares are lying in the DP, which cannot be frozen. So the client's assets were protected. We were client-centric in our approach. We had a shortfall of lack of activity for nearly 1 week before the Yes Bank moratorium got over and the accounts got opened up again. 2 episodes which, according to me, tested the character of any professional that was there who were working with us. And in both cases, I think so, we had learnings which we have ended up executing over a period of time.
I so much agree. So the words that I could pick up from the entire conversation was process.
Yeah, right? Goes without saying.
Client centricity, work for the clients, work in their best interest. And I think the moral is that we should stand to the character of being righteous in following every process or dealing with people's money right throughout. I mean, it doesn't hold any gap anywhere.
100%. The best relationship managers that I've seen in my life have a belief which is first based on their knowledge levels, and second is the belief that I do not have short-term targets. If I take care of my client, the client will end up achieving my targets that are there, be it long-term or short-term. Whereas you have RNs who live for the day, saying that aaj nahi kiya, I'll end up losing my job, I'll end up not achieving my targets, I won't be able to go for an international trip, etc., etc. Client centricity is the core of our business. BFSI functions on trust, and trust comes in only when you are doing the right thing for your client at any given point of time.
Such wise words, sir. Thank you so much again. And that would be it. Any wise words for us?
No. I think so. Whatever you guys have learned in the last 2 decades of your careers, end up ensuring that you keep the client as the center of your decision making when you end up building processes for that. Stick to the processes. There shouldn't be any rules that are broken except by one guy who will be the head of the organization who will take those calculated calls in case it is required. Otherwise, the process has to be followed 99.99% of the time. 0.01%, even markets ends up teaching us that there is nothing constant in this market.
I'm so agree. Thank you so much, sir, once again.
Pleasure is all mine.
No, sir, pleasure is mine. This would be my first, and I always, in my mind, had you as one of the mentors who's taught me beyond the office hours. So thank you so much for giving us this time.
Please, the pleasure is.
And I hope that we could have you in many more such occasions.
Anytime, please, anytime. I'm more than happy to see you guys grow. I'll be more than happy to come in for the more podcasts as and when it is required.
Yes. Thank you so much.